Okay, recording this video Saturday 29th of October 2011. Hope you're having a good weekend. I just thought I'd record some charts, multi-market stuff, and just some thoughts on where we are with this rally after a pretty epic week, really, with the news out of Europe that everything's fine and we can all go back to business. Nothing to see here. So here we go. Trendline chart, first one, daily Emini. And once we bounced at the beginning of October off this back into the range, I said mentally I had to get prepared for a rally back up to 1200, well, which was the other side of this kind of congestion channel. Got to 1200, no problems, kind of hung around there for about a week. You can see we kind of broke out of it initially, kind of broke back in with this white bar closing back within congestion, and then we held around for a few days just above the trend line, and then we the trend kind of continued on, exploded on, and we're now within a whisker of 1300 on the other side. So we've gone from pretty much 1100 to 1200, 1200 to 1300 here, and starting to see a little bit of signs of weakness, but I think we're actually probably about a week away from the final end of this move. So that's what I'm going to be looking for next week, and the 1300 number is going to be pretty key in that. Just a couple of notes about Thursday, Friday. With the news that we had, it was a gap up on Wednesday night into Thursday with the news out of Europe. So this was kind of the gap up. Fairly decent volume, but Friday very low volume, but it actually ended up being a high churn bar, which means for that range the volume was relatively high for that range, and so that means a little bit of profit taking going on there. There's a similar type of high churn bar here at highs, where the market's kind of just finding it difficult to kind of digest. There's quite a lot of selling pressure kind of coming in that's stopping the move, kind of getting up through 1300. And better X trend has followed the stop up. We now had a few days of exhaustion kind of buying, and so this stop kind of keeps on being trailed up, but we're still sitting, that's trailing stop is still sitting down at 1216, which is still a long way away. Now, what's happened in terms of cycles, this is quite an important principle, is that we get to this daily chart, better sine wave, we get to a resistance point here. And initially it seems to hold, resistance gets printed, and then we start oscillating around that resistance line, and then we continue on, and so we have a breakout, an overshoot if you like, of this kind of resistance level. So once that doesn't hold, the question is, well, where's the next place that it's going to find resistance? And there's two ways of looking at that. The first one is to go one time frame up and look for the next kind of resistance line. So if we go a time frame up from daily, that takes us to a weekly chart. You can see here we're a week or so away from cyclical cross on better sine wave, and that'll be where the next kind of resistance point will come in on this uptrend. Interestingly, it also happens to be where we had the breakdown, which was a pullback level. We got broken to the downside here, so support is broken and becomes resistance the next time up that we test into it. So support becomes resistance here around that level. So this is a really important kind of point in the market, just kind of shy of 1300. So the first way of looking for the next point up for where the trend move is going to stop is one time frame up, looking for the resistance level to come in. The other way of doing it is to go one time frame down and look for a pullback to end of trend sequence. And if we go one time frame down from a daily chart, so that's a 135-minute chart, there are 3 135-minute charts in a day. You can see we broke out a fair few days ago now into this uptrend on the 135-minute chart, and we've still not had a pullback to end of trend sequence on this chart. So, and again, I talk about kind of low and high time frames and how trend moves in lower time frames are equivalent to cycle moves in higher time frames. So the lowest time frame here would be 135, the highest time frame would be a weekly chart. So when we get that pullback to end of trend sequence on the 135-minute chart, that should dovetail in with a cyclical turn on the weekly chart, and all of that is at an overshoot of cyclical resistance on the intermediate, the middle time frame chart. So hopefully that kind of makes some sense. I think sometimes when we look at it kind of side by side, let me just rearrange these charts. So here we go, looking from the lowest to the medium and the high time frame, just as I would on a daily kind of day trading charts. 500, 1500, 4500. So the 135, the daily and the weekly chart here. So we've overshot on the daily chart, and we'll form a pullback to end of trend sequence on the 135-minute chart that'll dovetail in with this cyclical resistance on the weekly chart. So that's what I'm going to be looking for the end of this move. Now, interestingly, a place to look for where we might see that pullback to end of trend is often signaled on these kind of lower, the lower time frame here on the 135-minute chart, would be when we get an exhaustion point on the 135-minute chart. That kind of shows a left shoulder, if you like, and then we get a pullback to the neckline, and then a final move from pullback to end of trend being the head of this kind of final move. And if you look at the 135-minute chart here using better momentum, what we've had on Thursday, Friday's activity was that exhaustion buying signal here. So I'm expecting on Monday, Tuesday, kind of that range to start to weaken into a pullback level on the 135-minute chart, and then have another advance till we find an end of trend sequence on the 135-minute chart. This chart's actually quite interesting in terms of better momentum. You can see kind of the psychology of this entire bottoming process here. So we had this sharp sell-off, all the blue professional bars coming into the lows. All of these, a whole family of exhaustion selling patterns, exhaustion selling on the move down here, tested with a pullback to end of trend sequence here, with a beautiful flush signal here showing that we've flushed out the last of the sellers at that point there. Then we spent quite a lot of time going through these cyclical patterns, so trend move into a cycle pattern like this, and then we just broke twice below that kind of resistance support line down here. The first time another exhaustion selling signal, and a final exhaustion selling signal. So with these two kind of pushes down, we'd finally exhausted the market and all the sellers had sold. So at that point then the market starts to advance. Interestingly, very weak buying coming into that news out of Europe, and then coming into the news on Europe, you can see we had a little bit of a rush for the doors, people trying to sell this move from here to here. That was kind of into the peaked on the Sunday night into Monday, Tuesday, and bottomed on the kind of Wednesday, and that was another flush signal down here, flushing out the sellers at that point. So, I mean, they tried to get it down, but that was as far as they could get that move going, and effectively we ran out of sellers at that point. We kind of bounce higher until we get an exhaustion to run in terms of buyers. Thursday, Friday's activity up here. This is the first sign of weakness, is an exhaustion buying signal. So that means we've got to make this kind of topping out pattern. There'll be a pullback to end of trend and kind of divergence patterns on this 135-minute chart. Then it's a question of once we see that weakness kind of come in, it's like we'll have another kind of wide channel, if you like. We'll have a high up here around 1300, and then we'll know the level down here is at 1100. So what's going to happen? Are we going to have another go through 1100 and keep on going down, or are we just going to settle in and keep on going through 1300? That kind of weekly turn you can see happening on a whole bunch of the equity markets. As the Dow coming up to the same pattern, support becomes resistance, and we've got that cyclical turn kind of coming up next week. Most likely is 500 to S&P 500, again a week or so away from that turn, support becomes resistance. NASDAQ, same thing, support becomes resistance, a little bit tight, closer into that cyclical turn happening, which is why I'm thinking next week's kind of critical. And then a slightly different pattern. We formed a support level on the Russell index, and then we're a little bit further away from finding a top or a cyclical resistance point here on the Russell. But you can see that kind of same pattern. So we've overshot the daily resistance, so the next level to look for is the weekly resistance level when it comes in, and that'll be an end of trend on the 135-minute chart time frame as well. So there we go. So that's my views on kind of equity markets. What's interesting is you can see all of that happening in all of the related markets as well. So just as an example, here's crude oil on the daily chart. So the resistance line kind of came in on crude, and we had Rambo patterns up here, no demand, and we started to weaken. You can see we had a few days where this resistance level was coming in nicely, and then the market kind of thought, no, things are looking up, So we had a breakthrough, that's kind of jumping the creek, blue professional bar through resistance, kind of getting this move kind of going. And again, you can see on the crude market, similar type of pattern that we had in terms of the sell-off on the equities market with the exhaustion selling. We kind of test back down. This time we come into flush signals down here. Blue professional bars kind of come in at the lows in the high 70s here at this point here, and then the market rallies on. And so in terms of crude, we've not seen the exhaustion buying in order to signal some kind of topping out pattern here. It's been fairly large buying going on in this market, kind of through this rise and this rise, but nothing to mirror the type of exhaustion buying that selling that we had that formed the bottom in this market. So I like to see, if you like, mirror images of the amount of selling that happens here in terms of the amount of buying that'll show the top of the market. So I still think there's a little bit of kind of bullish activity that we've got to see next week in terms of exhaustion buying signals before this whole thing's over. Now I could run through all of the charts on these kind of related markets. Crude oil, euro, same thing. There's that resistance level we poked on through. In terms of copper, slightly different pattern, coming up to a cyclical resistance here, and we've had with this last move had the first sign of weakness, which is exhaustion buying here, and that'll be a pullback under a downtrend here. Aussie dollar, we've not had the exhaustion buying, but there's the resistance level that kind of came in and we kept on moving through it. Silver, resistance that comes in here, and we just kind of kept on going through it. So again, the next level up is on the weekly chart. Gold, same deal. The pullback level kind of came in. We never formed a proper kind of end of trend. We just found some strength here and kept on moving through. And then, so if you go up to the weekly charts, here we're a couple of weeks away on the crude chart before that market kind of rolls over. Gold, same thing. We've got no sign of weekly resistance coming in there. Euro, again, these lines have to come up to 100 and cross before this kind of starts to turn over. Copper, quite a ways from a cyclical weekly turn. Aussie dollar on the weekly turn as well, and silver long way away there. So so on the equities markets, looking like next week that we'll get that weekly resistance kind of come in. On the related markets, it's a little bit kind of further away. If you look at dollar index and the bond markets, it will be kind of the reverse of that. So we had the support level kind of come in here on dollar index, and the exhaustion selling signal came in around that level as well, but it wasn't enough to stop the move. So the resistance level got broken, blue professional bar kind of come in. Friday we held up quite nicely. So dollar index is, I think this is when I look at my commitment of traders numbers, this 75 number is absolutely critical. So I'm kind of long dollar index after I got out of my Aussie dollar position kind of halfway through the year. So I've got all my trading capital in dollar index, and I'm still holding on to that. I still think that's good, but I'm going to have to sit through this until dollar really starts to strengthen. And then when you look at bond contracts, let me just show you the here we go, 30-year bond contract. The support level kind of came in and it didn't hold because we hadn't had enough kind of exhaustion selling on there to actually hold that. Flush signal would have been nice, or something like that kind of down here in order for this to rally. Blue professional bar here at the lows, and it did hold on Friday, so the bonds are kind of holding up a little bit here. And then when you look at these entire things on the weekly charts here, we're starting to make these kind of weekly down moves, and we're a ways away from making a weekly support. So just as in the risk on markets, we're looking for a weekly resistance level that's a couple of weeks away. Weekly support on the risk off trades is again a couple of weeks away. We need this to kind of come down to 100 and cross. And then let's look at the 30-year again. 30-year again a couple of weeks away before a cyclical support level kind of coming in here. So I think it's going to be a messy market over the next week or 2 weeks kind of going forward. I don't think this is straightforward at all in terms of just a straight shot through 1300 and away. I think we're going to find a lot of resistance around 1300, and it's just going to be fairly choppy trading for the next week or two. Which I quite like. I quite like kind of choppy range trading. I think the better series of indicators do quite well when the ranges are kind of fairly compressed during a day. So that's my assumption about what's going to go on going forward. Just another kind of confirming thing on the Trin oscillator systems here. So we've got Trin oscillator bottomed out during this last week effectively here. And again, you can see this, we're at -20 here, so we've got a few days to run, next week to run, in terms of the trend oscillator reaching overbought over here and starting to turn over. So we've lately had a lot of cluster of buying signals here. Trend oscillator systems rolled over, last week, and have been, acquiring positions kind of going through this, and they'll take profits when that oscillator kind of turns over. So let's see how far this market goes until that. But in terms of timing, it's starting to point to the same type of thing, kind of towards the end of next week is when this market's going to be topping out, but I think it's going to be choppy moving up to that. 40,500 tip bar chart, largest kind of time frame chart that I'm looking at on my day trading, and just this move into Thursday Friday's activity. So Thursday Friday activity, we had a lot of blue professional bars kind of up here at the 1290s. That was an important kind of level up here, and we've actually had on Friday's activity a pullback level. That's actually just printed there. It's a bit messy underneath those bars there, but that's a pullback level, and we'll have end of trend kind of go off on Monday on the 40,500 tip bar chart. And it was a dirty end of trend pullback to a dirty end of trend here on the 40,000. So we're kind of getting overreached here, but this rally has all been a function of exhaustion selling. After Monday we came down, Tuesday, Wednesday we had these exhaustion selling signals here. So we ran out of sellers at this point, and that's what we've rallied from. So I'm going to be looking for the same type of exhaustion buying signals before we kind of roll over here. I don't think that's necessarily enough here, this kind of bearish divergence. Certainly on Thursday we're fairly elevated levels, but it didn't mirror the amount of selling that we had kind of Tuesday, Wednesday. So kind of wait and see really in terms of this this chart going forward. Now, two kind of just bigger picture type things, just talking about average trade size, and I mentioned, well, I was having huge, on Wednesday, Thursday, huge internet problems, so that wasn't why I wasn't kind of pointing out these charts at the time. But let's just look at this average trade size, 135-minute chart, so three of these bars per trading day here. Look at these kind of spikes up through these levels here where we get extremely high average trade size. That's professional activity going on here at these highs, at these highs, at these highs. Now the thing to do is not to expect, I mean, professionals take time to get into and get out of positions, so it's like, once you see one of these, or this one for example, it signaled on the Monday and led to the sell-off on Tuesday, Wednesday, that's not the end of the move. It's like the professionals take their time, but all it's saying is the professionals, when we're moving up through these levels at these highs, are starting to back out of their positions, so they're taking profits, starting to get their shorts on. So that's what these kind of signals show. And if I look at this in a different way, if I use actually my average trade size using the Better Pro-Am coloring, which is blue bars for professional bars and yellow bars for amateur bars. Again, this isn't Better Pro-Am on this indicator. This is the average trade size, which is code that's not been released, but just to show the coloring. So here's blue professional bars at the highs, at the highs, at the highs. For this sell-off, they're kind of taking their profits here, and then they're starting to take profits here, 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 and here. So that's all I'm saying. It's like this is not definitive in terms of, and you can't just use one indicator to signal kind of market beginning and end of rallies and declines. So it's all kind of a whole picture that I'm trying to paint here about the professionals are starting to take some profits. And last thing, I find this quite interesting because we've got all the sovereign debt crisis in Europe kind of, well, it's fixed, isn't it? So I mean, that's all over and done and dusted in Europe, and everybody's got their eye on Europe because it's incredibly interesting what's going on at the moment. Fascinating. History books will be written about what's going on at the moment. But I'm starting to get the sense that rates in the US are bottoming. And if they start moving up and we start going, this could be the beginning of a kind of start of a rally phase in interest rates. And I've been talking about this in terms of the monthly swings in interest rates. And what's interesting is the picture the emphasis might change. Everybody's looking at, for example, Italian rates versus the German rates, the spread between those rates and how that's blowing out and showing that the Italians are very difficult, if not impossible, to raise money in the debt markets. Interest rates might starting to be finding a bottom in the US and starting to creep up, and all of a sudden everybody's not worried about because the rates are so low, not particularly worried about funding the debt in the US, and that kind of story's gone off the boil right now. But all of a sudden, if rates are starting to creep back up, and right now I'm seeing, you know, the beginnings of the bottoming in that rates. And if we start to break into an uptrend, all of a sudden the emphasis in that story, the sovereign debt story, will move from Europe to the US. And I find that fascinating, the way that we might actually, you know, get again kind of more pressure, and you know, next year's story leading up to the election could well be, you know, higher interest rates, government debt, how we're going to cut the deficit and cut the debt in the US. So I've been talking about on the monthly charts how, you know, on daily, weekly, monthly charts you can use better sine wave on the interest rate chart. So this is the 30-year bond. I said that the downtrend in the interest rates and therefore the uptrend in the bond market would not be over until we got this cyclical cross. Well, lo and behold, in this last kind of month, we're starting to see that happen. It's not signaled yet. You know, we still think we're a month away in terms of confirmation, but on the daily charts we're starting to run out of steam in terms of trend moves on the way down. And it's interesting that it's almost like a double bottom here, down at 3%. So that's the 30-year on the monthly chart, and you can see that crossing. And so, you know, in the month or two ahead, that's going to be a bigger story, that rates are moving up but the bonds are going down. 10-year, same thing. We got that kind of crossing, and that might kind of signal at the end of this month that that's kind of a confirmation there. And the 5-year, yeah, maybe a month away before a cross here, but you know, these are extremely low levels, and historically record low, if you like. And then if you look on the lower time frames, the daily time frames, these kind of pullback to end of trend sequences. This is a dirty end of trend sequence. Pullback level got violated, and then support kind of came in over the last couple of days. So we've had this huge kind of basing, bottoming pattern in terms of rates down here at 1%, and you know, we're starting to move up. On the 10-year, same thing. Support kind of came in here. Wasn't a pullback to end of trend sequence on here, but you know, these two levels down here at 1.8% were really almost like a double bottom. Rates are starting to move up, and then here's the 30-year here. Pullback to end of trend. This kind of made the same sequence that, for example, crude oil was making. It's like, you know, the resistance level, or the equities markets, the resistance level got broken. We didn't get a nice, neat pullback to end of trend sequence here. We've kind of broken through pullback, and we're, you know, kind of starting to move on. So yeah, I mean, we could easily kind of come back down, test again, but all I'm saying is, you know, longer term picture over the next couple of months leading into Christmas, I think the beginnings of this bottoming process in rates and topping out process in bonds could be starting to play out. And the last couple of months we had huge volumes in the bond market, which is that kind of exhaustion buying activity. So anyway, I've rattled on too much. If you got time to watch the whole of this video, good on you. Thanks for that. So that's all I'm looking at on my charts kind of this weekend, and back into trading full-time. My internet connection looks like it's sorted now, so pleased about that. Anyway, hope you had a great weekend, and good luck with your trading next week.